So, are we celebrating good news or are we just ignoring the bad news? If you watched the price action on Friday, we got a jobs report that was objectively hot. Unemployment dropped to 4.4%. Wages went up. Historically, that is the exact recipe for the Fed to say no rate cuts for you. And yet the S&P ripped to new highs, closing near 7,000. The Nasdaq added almost 1% and we saw green across the board. Why is that? Because the narrative just shifted right in front of our eyes. We went from bad news is good news to strong economy equals strong earnings. The recession fears are dead for now, and the market is pricing in a possible no-landing scenario for the first half of 2026. Jerome Powell does leave in May though, so things may change. Welcome back guys to Swing Trading and Coffee. This is the weekly trading plan. I'm going to break down the market action, the options flow, and the key levels I'm watching. I'm going to connect the dots on the narratives and show you exactly how I'm building my trading plan around it. Just a quick reminder for you guys, this is not financial advice, so please do your own research. This content is educational only. Let's unpack the week because it started a little bit messy and then it ended very strong. So the big headline was obviously the non-farm payrolls on Friday. The bond market didn't love it. Yields ticked up because the odds of a January rate cut just plummeted from 70% to under 40%. But what did traders do? They didn't care. They looked at the wage growth and they saw the price action and they said consumers have money to spend. We might still have some gas in the tank. This saved quite a few stocks, including Tesla, which found support after the delivery miss earlier in the week and the drama with the BYD takeover and sales volume. And this is not just about Tesla, this is to get to a point here. The buy the dip crowd is still very much alive, and we can't ignore the geopolitical wildcard. The Venezuela situation earlier in the week sent a shockwave through energy stocks. We saw Chevron, we saw Valero catch a bid, and that sector is holding up pretty well as a hedge against all this tech exuberance. But before you go full bull mode and max out your margin, you need to know what is coming next week. We may have cleared the jobs hurdle, but now we face the boss battle. CPI inflation data. With wages heating up in Friday's report, all eyes are fixated on inflation. So if the CPI comes in hot next week, that could change the narrative for the market almost instantly. And S&P is starting to flirt with the $7,000 level, which we are going to break down in a second. This is a massive psychological level for the market. So the market is priced for perfection right now, and any uptick in inflation could trigger that rug pull we managed to avoid this week. Meanwhile, in the crypto scene, Bitcoin is just chilling above 90,000, not doing too much. It's consolidating while the equities play catch up. I'm watching for a breakout there to see if the risk on appetite starts spilling back into the market or if whales are distributing. So how do we trade the S&P right now? Do we front run the breakout or do we wait for the CPI dust to settle? Let's get into the technicals and the options flow so we can see where the money is positioning. All right, looking at the options flow, I have this sorted here for the largest premiums that came in, and this is for the Friday session. So at the very top, we have ServiceNow. This one had a $43 million put. And looking at the chart, it seems that it's approaching a major support level. So I'm not quite sure if this is someone who's selling the puts or if somebody who's getting short here. We're going to look at the charts and break it down further. Palantir coming in with an aggressive sweep for 25 million. So we're going to look at the Palantir chart as well. We got more money coming into Nvda, looking pretty strong, and we may have just found support. Money coming in on Apple as well, and a lot of money coming in on the SPX. Now, if we flip over to the gamma exposure on the SPY, this is where our spot price is at 694. And we are actually right at the call wall. And if you look up here, we have a little bit more calls, but when you go down, there's not much in the way of puts. A little small put wall at 680. And this is telling me that the market is really looking bullish right now. The question is, do we get continuation next week or not? So on the SPY chart, let's put down some lines and see what's going on. we have this trend line here at the bottom, and this is what we've been holding for the past couple weeks. And then you could put another trend line here at the top, roughly here. So you'll see that we tried to break out once here, it faked out people, and then it came back down. And then once we got to this day right here where we had that candle, that wick, that's where shorts got trapped. People thought that this was beginning to roll over, and then the buyer stepped in, and we held this light line here. This is the 21 EMA. You get a bounce off the 21 EMA and the trend line. That tells you things are pretty solid. And after that, we tried to break out a second time. We failed, and then small pullback, and then the real breakout came. So this is looking strong, and I expect follow through. Now I have a couple positions I added on Friday, and I'm waiting till Monday to see. Once we get a confirmation candle, we get one more candle here, then I'm pretty happy that this has held and it's not just gonna roll over another time. Looking at the volume was pretty good for a Friday, so can't complain about that. Short-term RSI, a little bit overbought, but if we switch it over to our standard settings, you'll see that we're still not overbought. And then going down to the MACD, we're kind of chopping around, but we are flipping green and it's starting to expand. So overall, looking good. I'm not seeing any real warning signs. On to the triple Qs, similar to the SPY, except we haven't broken the highs. However, we have broken the trend line. We get one more candle for confirmation here, and I'm going to be pretty happy. SMH, these are the semis, and let's clean this up a bit and put down some more lines. So you'll see that we have broken the trend line. We've come back for a retrace, and then we've bounced. That is a fantastic setup. Now, if you get down to Nvda and AMD, you'll see that they're not doing as well as this based on what they have on the ETF. So I'm thinking that we are going to get follow through here. Semis are going to start ripping. I think semis are going to be the next play. Taking a look at Nvda, so we were in this chop down here. We formed a double bottom. We came back and we pulled back to support. Now this for me might be an entry, but I didn't see that bounce on Friday. So I hesitated to get in on Nvda. But if we start seeing a nice powerful move on volume, that might be the entry to go long, so we can go up and take out these levels up here. We have this previous resistance here around 195, and then your next target would be the all-time highs. AMD, we were in this channel here and we broke out. However, it pulled back. It didn't show continuation. Let's extend this line a bit here, see if we can figure out. Yep. So this is exactly what I thought. It broke out of the channel, it came back for a retrace back to the trend line, and then we're looking for a bounce. So it's the same story as Nvda. So I'm going to be watching this, and I'm going to place an alert here. If we break this 217, that would signal to me that we're trying to take out this zone here. If we get above it and hold, then I think this could run up to around like 265, 266. So we're going to keep an eye on that. Google, this one I've been talking about for the past couple videos. I told you guys that we have broken the trend line and we've come back for a retest. So this was my signal to go long once we started bouncing off the line. I ended up getting options expiring less than 2 weeks out, so I could capture the volatility with leverage. And this play ended up yielding me about 130% profit. What I did is I took some profits and I rolled the remainder into an expiry that is further out. We closed right above the highs, just slightly above the highs. And when you close on the highs, that signals strength. When you go up to the highs and you bounce off and reject, that tells you that there's weakness. Also, we had this very strong wick here, and that gave me further conviction to keep holding this position. So I'm targeting right now, based on the fib extensions, 342 to 354. Still holding this, just giving it more time. Amazon, this one is the killer trade of the week. I played it the same way I did with Google. I ended up buying short-term calls as we came back to this trend line, and this is a long-term trend line. Let me zoom out so you can see it. Right here, we had multiple points of contact, and it is also at this volume area here, this point of control where we had a lot of buyers. So when you have two different support levels, whether one of them is a trend line, one of them is your point of control, that signals a very strong entry point. And you can play this with a stop right below this level. So you get in really tight, and then you have a lot of upside potential, which is why I went aggressive on this and I went with short-term calls. This thing absolutely ripped. It has more room to run. I think it's going to take out the highs, but being in short-term options and I made pretty sweet money on it, I decided to close it out and move it into another stock that still hasn't broken out. We want to get in early. We want to get in on the pullbacks. That's the best way to swing trade. You can also play breakouts, but when you get in on the pullback and you ride it all the way up, that gives you a much better risk to reward ratio. ARM, this one I picked up on Friday. You'll see that we have been beaten down pretty bad, and we're back at this level here where we had previous resistance, and when you're above it, it's now support. We also had these 2 points here, so we may dip lower, but what I saw is that we had a reaction off this level. We had one bounce here, we came up, we failed at the 21, we pulled back, and then now we're starting to get these wicks showing us that we may have some buyers stepping in here at this support level. So I began a starter position, and we're going to see if next week, when if the market continues to the upside, if this could get a nice bounce to around like 130. I bought these options for like 2-3 months out, almost 2-3 months out, to give it a lot of time, because I think this could have a sweet recovery all the way up to like 145. And if you measure it, that's about 30%. That's a lot of profit if you can nail it. Compared to your downside, just a couple percent if you place your stop down here. So I'm going to see how this goes. I'm going to give it sufficient time for it to unravel to the upside. If we start dipping back below here, like we break this line, that's where I know the trade is not going to work out, and I close it out and take a loss. MCD, this is McDonald's, and one of the more boring trades, but we are in this sideways pattern. So what I did is I got in here around the bottom. So I wrote it up a little bit. It has a bit more room to run, but you can't guarantee that it's going to get up to the top. I captured enough of it with short-term calls. I'm happy. Gonna move it into something better. Tesla, this one I made a full video on yesterday, so I'm gonna go over it real quick. What happened here is that we tried to take out this level once, twice, and then the third time we got above it and we held for a while, but then it started rolling over, and that was a sign of exhaustion. I got out right before I broke the trend line once I started seeing the weakness. I reloaded down here, and actually I got a little bit in here for a little bit initial position. Where it says here DCA, this is just my indicator that I have coded for TradingView. It's one of my strategies for pullbacks. I don't use it to enter the trade. I use it to confirm the trade. You know, it started flashing up here, and I picked up, so I was a little bit patient because it failed to reverse. We had a very small green weak candle. However, once it started coming down to the point of control and I started seeing a reaction, I'm like, this is the time to get in. So I switched from my short-term calls that I was playing up here to longer-term calls. I'm targeting the $500 level. I think this could happen in a matter of weeks. UnitedHealth, we are at the 200 SMA. This is acting as our resistance. But once we flip this 200 SMA, I think we are going to start running up really hard when we got this big gap up here around 535. Also, we've come above the EMAs, and you'll see that this yellow line here, this is our resistance level, and we've broken it. So we have like a double bottom. You could argue that this is, I don't know, not the best inverse head and shoulders, but it is a reversal pattern. At the very least, it's actually like triple bottom here. So now that we're at this point, I got in We have our EMAs tilting up. We've broken this resistance level. So I got in for a breakout. Let's see if this can run up. Our first target here would be roughly 373 to 381 at resistance. And then our much bigger targets would be going up for the gap fill. Alibaba, this one I did an overnight play on. I mentioned this in one of my videos that I bought this red candle here, and you would think I was crazy. But we are at a support level, and this support level corresponds with this level back here. So it's been holding, and then we had a gap down. I bought calls like 2-3 weeks out, and then we had this colossal green candle the next day. So I sold near the close and got out. Perfect overnight trade. There's no need to hold it longer because we're coming up on resistance here. The EMA is here, and we have this previous support level, which is now our resistance. And then after I got out, this is exactly what happened. We gapped down and we whipped around. We got a wick which showed, buyers are stepping in. They're buying the dips, which is great, but I locked in profits. That's the important thing. Lock in profits. The name of the game is capital preservation. I got a couple requests on Lulu in the comments. So we have been beaten down really heavily for a long time. The reversal happened right around here. This was the reversal. This would have been your entry around 182, 183. You can actually push it up a little bit higher here. So once we broke this level, we had our double bottom right here. And then now we broke in the 21 EMA and we're coming up on resistance. So we have resistance here and we have resistance at the 50 EMA. Now, would I take the trade here? I would say the best area to have gone into the trade was on the breakout here. But we also have this other resistance level. And we've broken above it. We've come back to retest it and we've held. So I would wait. So me personally, the way I'm going to play this, I might get in on this. I'm going to watch for this level right here around 220. And I'm going to put down an alert. If this breaks 220, then we may be getting ready to go up to 285, 286. Let's take a measurement on that so we can... Roughly, that's 30%. That's pretty good. This is a volatile stock. So, the downside, 17%, upside, 28%. It's not quite 2-to-1. So maybe I would just play it with a tighter stop here. That way I limit my downside. But first, I want to see the breakout. I wouldn't place it down here. Actually, the stop would go up right down here once we break this level. I wouldn't want it to come down here. That would be a failure of the breakout. Service now, this one you'll see that we've come down to this long-term support level. And this is likely where the accumulation is going to happen. Let's drop down our volume profile. So we've broken below it, which is not good. So the question here is, does this chop around, form a base, and reverse to the upside? If that happens, that for me would be my signal to go long. I want to see it break above this point of control, and I'm going to watch it here, see what it does. If it continues to the downside, maybe I can grab some at about 125. And you'll see that if you zoom out a bit, you'll see that we have this support area right here. So maybe this is why we're holding. This looks like a possible good spot to load up, but this last candle here didn't show any reaction. It just closed on the lows. So I don't like this. I think it may go down a little bit lower. I'm going to watch, see if it can get down here, place another alert. This may be a better spot to load up for a bounce where it will be really extremely oversold. Netflix, we are looking like we're getting close to a bottom here. Let's switch back to the daily so we can see a little bit more detail. I don't think it's done yet. I think it has to come down to this level. This is your double bottom, previous support. So I have my alert here. Once it starts coming down, I'm going to consider seeing if it has some kind of reaction. If it bounces, then I'm going to consider a play for a rebound. But right now, the trend is still bearish, and I would not recommend getting in here. Cisco, this one I'm liking because we have come down to fill the gap, but this is going to be on my watch list. Now, we will see if this can get a bounce off this bottom here, or if we start reversing, it may be time to load up. And let's put a line down here from this previous resistance. So that's our support. We're going to watch this zone. If it comes down or if it begins to reverse, it may be ready for a bounce. Where would my target be? My target would be up here around 77 to 78-ish. And stops would be right around here on the 72 zone. And Micron, absolutely insane stock, absolutely ripping. I've been waiting for a pullback and it's not giving it to me. This looks like this was the pullback, but do I want to get in here on something that's this overextended? I don't know. We had this trend line, it got above it, and then it retraced to it, and then it bounced. So that tells me that this could just be getting ready to shoot us straight up. But that's just a bit risky for me. I don't know how I feel about this. I like trades that have pulled back or that have broken up, but they're not overextended. This is overextended, so I'm going to be patient. Even if it comes up, rips up, and then it'll come back down to retest support. That may be my entry to go long. I'm very long-term bullish on Micron because just look into the narrative. Their HBM is sold out 2026. Demand keeps going up. This is one of the core stocks for AI. They make the HBMs, and that's what Nvda needs to produce their chips. Quick look at Bitcoin here. Like I was saying, this thing has just been chopping around and it broke this level. And I said, I'm not touching this. No way. Not until it gets above the point of control. We came up, we failed, and now we're back again. I have my alert set up here. Once this breaks, that's going to be the turning point for Bitcoin and the crypto market as a whole. But as long as we're sitting down here, this is not something I want to get in on. It's going to be a waste of time and money. I hope you guys like this video. If you found it useful, do me a favor, hit that like and subscribe so you can help me grow this new channel. Also, it helps me keep bringing you great content like this. Enjoy the weekend, guys, and I will update you again on Monday or Tuesday. Take care.